Make trading safe, make your Christmas safe. Hi, my name is Richard Lee and I manage the Stockradar.com.au website. We manage a high conviction momentum strategy with strict risk management protection. We have a trend intensity indicator that validates trend development and stop strategy to protect those trending moves. You can take a free trial and track our approach if you like. Okay, let's get to the markets. First off, Dow Jones. Well, we've had a little bit of a blip again, a little bit of a rundown. Here we are, the Dow Jones, and again we've had a nice little bounce back already. So, a little bit similar to this move here. It really needs to take out the highs for us to be really confident, but it's a good move, and we've weathered some fairly heavy selling down here. So, pretty constructive move. This has been a good rally this week, but as I say, it needs to get through the highs if we're going to continue this trend higher. Okay, so that's the Dow Jones. The Nasdaq has also been strong, a little bit stronger maybe, but it's bounced pretty well. It's had some pretty heavy selling there. It's come back as well. Renewed strength again. We look for the R1 level to be taken out to resume the trend. Momentum is steady, so everything's okay with the Nasdaq. And I just wanted to show you this one because this is almost like a straight line. The S&P 500 is just going straight up there, keeps going up and up and up, and a beautiful little trend channel there. And it's just a delight to see. So we're lucky we've been able to get onto some of that sort of stuff. Okay, now copper. Copper is still range trading for the moment. It's been working this range for a while. We've had some good buying down here. We've just seen some fairly heavy selling over the last few weeks, pushing it down off these highs. So it remains hemmed in for the moment, consolidating a fairly big run up already. Okay, now we go to Brent Crude. It's also recovered a bit. We had a bit of a sell-off there. There's been some very, very heavy volume there at the moment. So this is the less likely to continue up through its highs at the moment. So we'll stay still at the moment, but it is going to struggle here. We've had a very good run. We're out at resistance level. We've seen some big selling, so there's some evidence starting to build there that we might have had a little bit enough on that, despite many expert calls for higher prices. Okay, gold futures, similar thing again, stuck in a range, not doing much. It's neutral. So when it's neutral, we don't really play. Okay, so that is the commodities really. Now to the ASX 200. Now, this has been pretty good for a while, but for the last few months we've struggled. Okay, so we reached our high back here in August. Since then, we've had a bit of a pullback to the old high. We've rallied, made a lower high, a little bit of a worry. We're recovering a bit better this week with the overseas markets, but we're still, we haven't taken out this little point yet. We're going through a little bit of a digestion phase, should I call it, with a bit of selling, meeting the buying there. So it may continue sideways, but watching the S1, that's really the level I'm watching at the moment. We've got a lower high here, and that could certainly trigger off further falls. But for the moment, everything's okay. No need to panic. Our stock pick count is down down 4 this week to 62 of 188. So we've lost a few stocks over the last few weeks. The 5-stock portfolio has 4 stocks, the 10-stock portfolio has 9 stocks, and the 20-stock conservative portfolio has 6 stocks. Our top sectors are still the internet and property groups, and they're doing quite well. Building our portfolio beginning in March, sitting at about 15.5%, just wandering around there at the moment. Pretty good gains we've locked in there, but hasn't been a lot of movement over the last couple of months there. Stocks in there are CPU, CAR, WiseTech, IPL, and Orica. And these are compounding with portfolios with dividends reinvested. Okay, so that's the XJO. So now let's get into the real nitty-gritties, the stocks. JB Hi-Fi, we won't spend much time on it. There's not a lot of difference here. It's in struggle city at the highs up here, and the sellers are on top again. A little bit of selling here. The volume sort of slided off a little bit here, and it often happens when you get in there. People get a bit disinterested, a bit disheartened, and not a lot happens. So at the moment, the buyers are probably disheartened we can't get through there. The sellers are disheartened because they can't break S1. So we're in a stalemate. So we just hold fire. Trend intensity rating is -6. Okay, Atlas Arteria. Interesting stock. The last few months, or since March, since the COVID crunch as I call it, it's been working pretty hard to build some sort of reversal pattern here. We've got a series of high lows here, which is positive. And we've got a resistance level sitting up here at $7, which is stopping all the rallies. And you can see some long candles here where we've tried and failed, but still the buyers don't go away. So now we see down here an interesting pattern where the volume's got very, very high here. So it's getting a bit heated, this discussion. But we see the last few weeks we've had a bit of a rally up, good volume. Momentum is just in positive territory without going crazy. So really I'm sitting here watching this develop, waiting for the $7 level to break for me. And if we actually go back on this chart, we go back for a long way. Atlas Arteries since about 2012 really has been trending up, apart from the COVID crunch, which knocked everything. But since then, it's trying to recover that poise, and I think if it can get through the $7 level, then 850 is the next target, and it may well resume this slow, steady uptrend that has been so well known for. So that's Atlas Arteria, and it's looking fairly constructive. So keep an eye on the $7 level there for Atlas Arteria. Volume's good, momentum's okay. Now, the next one I want to go to is Metcash, one that we've been following for quite a while, and it really has stood up against those big four: Aldi, Costa, Woolworths and Coles, and it's created its own little niche. We've got one just around the corner here, a little bit expensive, but it does pretty good business. So this stock really has been looking quite good for a long time. We bought this one above $3 back in about a year ago, November last year. Well, it's now December, so it's just over a year. But we're now having a big kick up here. A good result from Metcash. It gives a bit of yield protection, and there's a very good trend protection there for you, just to run your stops up below. So keep an eye on Metcash. It's actually now making new highs above here, so this is quite a significant break. It's come back, it's tested it a couple of times, but it's holding the average, holding the trend line, all looking good. All the volume formations down here, all excellent, as is momentum. It's slowed down a bit, but it's still very high on the scale. It's very hard to keep this sort of momentum up sometimes. So as long as it stays above zero, I am positive. So that's Metcash, trend intensity rating of 8 for you. Okay, now I covered Goodman Group last week. Goodman Group was one of the property stocks. This week I just want to have a look at Charter Hall. Similar sort of thing. It's made a new high and it's continued up and started to develop a nice trend. We've had a good pullback here, a high low, now makes a new high. This is what we want to see. Impulse drift, and that's how it works. So this is in a very good uptrend, and the volume's been fairly healthy. Momentum is strong. So, I quite like the look and shape of this one. It's just a steady trend. That seems to be going higher, which is what trends do. So that's a trend intensity rating of 9, new high, volume's okay without knocking the lights out, above the average, and momentum is very strong there. So that's great. 9 Entertainment, recent entry. We'll go through a couple of these techo stocks for you now, because they've been interesting. They've had a bit of a struggle. I think some of our stocks, people are thinking about valuations. The Nasdaq still keeps going higher. Obviously driven by those big stocks over there, but still some of our stocks are still looking pretty good. So the internet is still at the top of our trend intensity table at the moment, with all stocks in qualified uptrends. So that's NEC is actually in the media thing still at the moment, but we might move that later on. But anyway, NEC did break to new highs here a couple of weeks ago. It's had good volume on the break, momentum triggered high, so all the signals were right. It was above the average. So it looked pretty good, but it's just come back a little bit. Not too concerned. Trend intensity rating is still 8. It's moving above new highs. I mean, really, if this was a correction to this up move, then it was a very, very mild correction, and that's a sign of strength. So we've also got a double bottom here, so buying is quite keen down here. And now we've just got a topple of sellers, because there have been quite a few sellers up here which brought this about. So we've got to get through there yet, but it looks okay. Volume's been quite good. Momentum's okay. Trend intensity rating of 8 for 9 Entertainment. Okay, the next one I want to go through is also a recent entry for us, Altium, which recovered after a bit of a bashing last year. It's recovered this year slowly, but we haven't done anything up until now. We've got a new high, so this is a new high for Altium. Pretty impressive. The volume is okay. It's a bit of a mixed volume bag, this one, not really easy to read, but the volume is okay. But look at the momentum, how strong that is, and look at how far above the moving average it is, and making a new price high is a very significant fact for me. So it's a confirmed weekly new high, the trend intensity rating of 9, hold fast, it looks okay, Altium. Okay, now the next one I want to have a look at is one that's probably been knocked about a bit. It's been going through a takeover which has now been aborted, and the recovery since then has been quite remarkable, because it's jumped from about $8 up to about nearly $10 or $9.50. The volume's been very good. We've had one bout of selling on the way through. That's been absorbed and taken on board, and momentum is starting to recover. So this is not a buy as far as a qualified trend at this stage, but this is a change. This is evidence that's building for a change of the APA. Now I think if it can get through something like this R1 level here, we've got a couple of tops here and a low here, it may well then target the highs there. So the trend intensity rating is still 0 at the moment. The price trend is still down. It is just crossed above the average. Volume is reasonably good, and momentum is still below the zero level. So not a clear case yet. Still a bit zero, but certainly one for you to watch, I think. And I think what you also should work out is that, I should tell you, is that this $8 level that it's been down to has been very, very, very strong support for a long time. So it becomes quite a low risk trade from that sort of level there. And if it does get through here, then we may see a resumption of the trend. Okay, so it's all looking pretty good at APA, down at APA Group, since it aborted the takeover. So there you go. All right, now the next one I want to look at is net wealth. Net wealth, quite a few people have rung me and asked me about this one. If you do want me to cover anything, I can cover stuff, so let me know. Email on the website. So net wealth itself had a huge run in 2020, as we all know. All those platform ones, they all had a huge run, Hub 24, stocks like that. And then we've hit a top here up around $18, and we are struggling at $18. We've got a high valuation on this one, so it's always a risky one. But they've got to keep delivering to justify the expected valuation there. So it's certainly become a bit of a battle through this $13 level through to about $18. Okay, so at the moment we're pretty neutral here on volume. We're slightly positive on the momentum without really being really bullish. But so really what we need to see is this resistance level fall if net wealth is going to go for another run. Bit like what we saw with WiseTech. It had a huge run, then corrected for quite some time, for a year or longer, and now it's made new highs and is going up again. So this could go, but I'd watch the resistance here up around $18 to signal this is going to go higher. Trend intensity rating is -4, a bit mixed, a bit neutral. Okay, so that's net wealth. The last one I want to go through is an old favourite. I always like to finish on a positive note. Is Computershare. It's got back up to these highs pretty well. It's not struggling that much. It's still working pretty well here. We've tightened the stop up a little bit. We can see this volume here that's pushed this really hard, and we can see the selling has now appeared, which we expected at this level. So we've got a little battle going on, but the trend is still firmly up. This has still come back a little bit without worrying me too much. So, if it does get through R1, then we would love to see it through R1 because that would be a big tick of approval. Trend intensity rating is 10, so that certainly suggests to me that's a hold, and just keep it going high. So that's Computershare for you, which has been a great stock for us. Okay, now I want to go through. Okay, now I didn't go through the format this week, but what we're talking about now is make trading safe, make your Christmas safe. I'm trying to get into the spirit today. We've had a really tough year. Kids have had a tough year, and we're really looking forward to a happy Christmas we can spend with our families and go on holiday for a bit. So let's get into the spirit, which is a bit of happiness. So make trading safe, use your stops, and make your Christmas safe. Okay. Now this is a format I was going to tell you about at the start. Really a bit about stops, and I'll go through them quite a bit. But I just want to talk a little bit about it because they're very, very important. I try to discuss the important things and not the unimportant things. Okay, so these are very key to me. Makes your trading safe, and that's what they do if you listen to them. Okay, Stockradar's remit is to educate traders on what's important. If you're going to make money, what do you need to really know? Focus them on that. So then they can understand and develop a successful trading approach. It's over to you. There are ingredients that we need to know, stops to follow, signals to follow. We need to do those things to make our methods and our systems work. So you need to be able to follow them. When you do this sort of stuff, I give you an idea and you can develop it, you can change it, but always keep things simple, uncomplicated, and you'll find they'll be far more effective. Okay? So stops are there to cut losses and protect profits. I go over and over that, but that's what they're designed to do. Cut your losses to a minimum and run your profits when you get them. Stocks like James Hardie that I showed you before, I've shown that chart to you a few times, but there's a lot of stocks, Aristocrat, Helios, ANZ, NAB, South 32, Metcash, Computershare, Macquarie Group, they're all doing it. So there's really no need to worry too much. There are trends everywhere and there are stops to raise up. Sometimes they don't work out perfectly. Well, that's just the way it is. But, there are some great stocks out there that we can make some more good money on. So make sure you use your stops and when you can. Okay, so when a trend develops, and many do, you can easily follow it with a stop, which is what I was just talking about. And this is the James Hardie chart, and this works out. This wouldn't be exactly where every stop was, but basically this is what you've got. It's almost like a Davis box pattern you've got here. It goes into one trading range, it breaks to new highs, it comes back to the old high, it makes a new high, it comes back, not so far. it's like these little box trading, breaks resistance, moves to the next level, comes back, finds support, higher support, and that's where your stops go below. So this is just a simple idea of how you do it, and really is the simplicity is good, because if we take a step back, we get that simplicity, and if we get too close, we lose that simplicity. Okay, right. Types, really, I'm here to provide a guide. I use an exponential moving average, as you all know, but there are all different types of stops. Trailing stops are good because they do that, cut your losses, they keep your losses minimum and protect those profits. And that's really important, because the profits, we don't ever want to see disappear. There's a great temptation when a stock comes back to say, I'll give it another week, I'll give it another week. At some stage, you've got to cut out, and often it's way too low. So use your stops. They can be fixed stops, they can be percentage stops. There are many other variations of stops, adaptive stops, all sorts of different sorts of things. You can use Bollinger Bands, whatever you might want to use. But choose one style that suits your trading style and your risk tolerance. Okay, don't make them too tight, because you get knocked out. Don't make them too big, because you lose too much money. Just make sure you find that right balance. Okay, but remember, they all those different types of trailing stops, whichever suits you, they all have the same purpose: to cut your losses and protect your profits. Okay, right. Quickly, just go through the Trading Center. The Trading Center is my main page, my main trading page, to show you the format of how I work, how it all brings together. So I just want to show you again that this is just one sector. It's a diversified finance sector. It's rating -5 on the scale, which means most stocks are not in there, and all those stocks below here are probably all in red. But we do have some stocks that are good and performing well in that sector. And these are some of the stocks here. Now, just to take you through this page, so this is how I monitor the trade each week. During the week, I'm not really looking at the market very much. I'm certainly not adjusting anything. So here you can see we take MQG down here, the second one. You can see a chart here. You can see the trend intensity rating. You can see, is it a stock pick? Yes or no. You can see the date of entry. You can see the price of entry. You can see the current price, and you can see exactly where the stop is. If it's green like this, covered up with white writing, that means it's a profit. Okay. So these are profits down here, already in profit. These are still yet to make a profit. Okay, as to where the stop loss is. They may well be up, as you can see by the profit and loss column, but they may still be not above their stop yet. So that's what that page does. It gives you an idea. It gives you all the things that you need to know. And this column here is the most important. This one here is the most important one. Is to know where my stops are. And over here, I tell you why I bought it. Is there any extra resistance, any dividends paid, things like that. So this is a monitoring page, and there's 170 stocks for you to have a look at, to follow. Plenty of things to choose from there. Okay, so that's the Trading Center. If you've got any questions, feel free to ask me. I can talk about them on YouTube, and I can talk about them to you, whichever way you like. Okay, so that's really what I've got for today. Don't forget to check out our blog. It's free and fun. That's where the YouTube videos are set up. First, just to finish off, good stop management, whichever type you use for a trend and momentum trader, stops are vital. Okay, stops are your saviour and keep us on the right side of the ledger. And that's what they do. That's what they aim to do. So good luck for your trading this week. Thanks for listening. I hope you all learned something today, and I'll see you all next week. Thanks very much, and Merry Christmas.